Gold just hit a 2-week high while the yen slid past levels not seen in 4 decades. And that sets the stage for a packed morning across Forex, indices, and metals. Coming up, dollar-yen, the euro, the pound, and gold are all on the radar, with a marquee calendar event for sterling traders sitting right on today's schedule. The full symbol-by-symbol read is ahead. Stay with us. Across markets in the last 24 hours, gold surged above $4,100 an ounce as Middle East tensions and rate uncertainty drove fresh safe haven demand. The yen slid past 163 against the dollar, touching levels not seen in roughly 4 decades as Japan's widening trade deficit, partly driven by elevated oil import costs, complicated the Bank of Japan's policy calculus. The dollar drew broader safe haven support, while sterling came under pressure from fiscal concerns, and the PBOC set its daily yuan fixing notably firmer than model estimates. And the one to watch on the calendar today is GBPCHF year-on-year. Dollar-yen is trending with strong bullish momentum, and the structure points toward higher levels from here. Price action has been consistently printing higher, and the yen's fundamental headwinds, a widening trade gap and BOJ hesitancy, continue to reinforce that lean. So the path of least resistance remains tilted to the upside while this structure holds. Pound Swiss franc carries a strong bullish trend, and the recent price structure supports a continuation toward higher levels. Momentum has been consistent, and the pair's underlying bid remains intact, making an extension higher the more probable scenario as long as the trend structure is preserved. Japan's headline index is trending with strong bullish conviction, and the setup points toward higher levels ahead. Despite yen weakness complicating the macro picture, the index has been absorbing that pressure well, and the trend structure leans clearly higher from a price action standpoint. Euro-Swiss franc is trending bullishly, and the structure favors a grind toward higher levels. Price has been establishing a constructive pattern of higher lows, and while the trend is not as aggressive as some other pairs today, the lean remains pointed upward while that framework stays intact. The UK 100 is trending bullishly, and the price structure continues to favor higher levels on the session ahead. The index has been holding its trend well, and the path of least resistance points higher as long as the current structure is not broken, even with sterling facing its own calendar risk today. Gold's trend has shifted to a mild bearish lean despite the recent 2-week high print, and the structure now suggests the more probable path is toward lower levels from current elevated territory. The sharp surge in price has stretched momentum, and when buying pressure fades at these heights, the trend structure points to a pullback toward lower levels, rather than a continued extension. Eurodollar carries a mild bearish trend on the broader structure. Yet the more immediate path leans toward higher levels as short-term price action builds a corrective bid. The trend framing remains cautious, but within that context, the near-term momentum is pointing higher, making an extension upward the more likely near-term outcome while the corrective structure holds. Pound dollar shares a similar setup to Eurodollar. The broader trend carries a mild bearish lean, but near-term price action is pointing toward higher levels. Sterling has a significant calendar catalyst today with GBPCHF, and the immediate structure is tilted toward probing higher levels ahead of and through that event. Aussie dollar is range-bound, and within that consolidation, the near-term lean is toward the higher end of the range. Price action has been oscillating without a clear directional break, but the current positioning within the range suggests the more probable near-term drift is toward higher levels unless the range boundaries are breached. That covers every instrument on the board this Wednesday morning. Hit subscribe so the next brief lands the moment it drops. This is general market information for educational purposes only, not financial advice.